The banks have successfully delayed clarity. Today we'll break it down because somebody needs to be held accountable. Let's get into it. I do want to thank our sponsor, BTCC. With the markets as they are, this is where you can get in there and start your first time with BTCC. And all you have to do is use our link. You're going to get a 10% bonus on your first time deposit and a whole lot of extras, including bonuses, 40% lower trading fees, and also can get into the VIP group. So check it out. Use our link down below. All right, let's lead off with clarity because I think this is the issue that everybody needs to pay attention to right now. The markup tracking toward May right now as the senators are splitting up on the timelines. There's some key things here in the report. The Senate Banking Committee is now set to turn its full attention to the Clarity Act, but it's looking to increasingly unlikely that the committee would be able to meet the timeline that they had originally hoped for. One area that he is pushing for, Tim Scott, is that he says he needs more time to socialize the deal with the bankers. So I don't like that. If you have to socialize stuff like this should be a basic common sense thing. You're doing this for the American people and you're out there trying to socialize a lobby to get this done. The key though is this May 11th date, because this is the first possible window that could open up, and that may be too late, guys. So think about this. If the banks just do one thing to possibly derail this, one little time bomb, that would be enough to start to push this back into June. Now we start to slip into July. Then you get the summer break. By far, you're going into midterms. What it boils down to is we are now at the point of no return. And I don't think the banks ever wanted this to get through at the rate in which we're going, which means that you can only blame a handful of people. And that's going to be the people who have led the charge for crypto. That includes Sachs, that includes Patrick Witt, that includes Lummis, that includes Tim Scott. Everybody who's been promising this and not getting it done. This is going to be an embarrassment for this administration if this does not make it through. Other things you can't be for clarity. If you're against rewards, it's one or the other. Time to choose. I choose rewards. Clarity Act signing in right here into law has dropped dramatically. This looks bad when you look at the overall. So I want to highlight one more thing here. And this, of course, is the banks doing a submission to the OCC and essentially trying to get them to change policy at the OCC to ban yields under the Genius Act. So implementing it, making it law, but also going through policy as the OCC. Mainly what this simply means, guys, is they're going to be able to try to get this done without even getting clarity on the floor. This is a big deal because it really starts to showcase exactly, maybe this has been the strategy all along for banks as a whole. All right, so beyond that, we got to lead into Iran a little bit. And with that, you've got Trump extending the U.S. ceasefire with Iran. Right there is his social post based on the fact that the government of Iran is seriously fractured, blah, 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 pointing at I'm going to back off, which even though there's people out there saying that there's not really a negotiation going on, maybe this is Trump just simply trying to de-escalate. I want to go to a clip real quick that will get into a little bit more detail of why and what would be some potential scenarios here. Take a look.
You know, I think that of all the situations, worst case scenarios that they were planning for today, when today was supposed to end the ceasefire, this is one of the better scenarios, right? The ceasefire is indefinitely extended. The bad news, of course, is that Hormuz, a key conduit for about a fifth of global oil and seaborne gas trade, remains shut, and it's unclear when that will open again. Now, we are around, high 90s, close to $100, but the traders were, looking at maybe 120 plus if the U.S. were to again begin attacks on Iran, like Trump had previously mentioned when the ceasefire would end.
All right, so with that statement, obviously you have seen the market react. Bitcoin is up right now at 79K as we're recording. Hitting in there. And if you look at some of the projections for year in on Bitcoin, the spread is around 100K to up to 275. Some of the big ones, of course, Tom Lee. Then you go all the way into Kathy Wood saying 275K. That's this year, guys, 2026. I don't necessarily agree with this because I think there's a few things that have to happen. Clarity, I don't think, has as much of an impact on Bitcoin. Now, sure, from the crypto community, it's going to be, maybe there would be a slight move on it, but I don't see it as a long-term effect here. I think it's really going to boil down to how Iran resolves and consumer sentiment. Consumer sentiment will be, I think, one of the more significant things, and that means prices, inflation, how the Fed is probably going to respond. We'll have more on this. If Warsh ends up cutting a rate a little bit later, and I'll talk about that in a second, that might get us into these kinds of ranges, but not, I do not think we would see a 275K. Again, I'm not giving financial advice, but I'm just saying these seem very lofty. And if you look at kind of the performance of a lot of these financial institutions, this, of course, is drawing in their own book. You know, they're trying to get people to essentially invest. And Peter Schiff kind of hit it right here. These are not experts. They're industry insiders hyping Bitcoin, bullish forecasts that they have no actual basis in reality. But in reality, this is what Peter Schiff does for gold. He is an industry insider hyping his asset, which is gold. So everybody's talking their own book. I get it. Understand, it boils down to how the market is responding. More case than not is sentiment. Cultural shifts that will change here in the United States is what's going to drive these asset prices, at least getting to a point where risk assets are more potential in terms of an investment opportunity. If you take a look at fear and greed, let's just jump over here to CoinMarketCap. You can kind of see it right here, 62, hovering on a position right now where we are in the greed zone. Let me kind of zoom in on that for you guys. We're in the greed zone right now. But remember back here, that was October 2025. That was the last time we started to see these kind of numbers in terms of the CMC fear and greed and where we were overall. And also at that time, you had $118,000 Bitcoin, so not bad. But considering that we're 83,000 or not quite 80,000 right now on this, I don't know. Maybe there's some opportunity here. Where do you guys think we're heading on Bitcoin? Do you think 85 is in the cards right now at the current state in which it's running? Because it's been what, up 10% in the last 30? So not bad for Bitcoin as an asset. Here, of course, is the breakdown on the Fed, and there's some interesting points here. Kevin Warsh, the new Fed, he'll be taking off soon. Cost of living is a top issue. That affects sentiment. Like I was saying, the Fed has made policy errors and lost its way. That may affect sentiment if they look at how they readjust policy. Calls for fundamental policy reforms. Okay, we'll see. I think it's a lot of red tape. Says he will be independent of Donald Trump. The minute he cuts, I think people would say he's a puppet. Presidents usually push for lower rates. Of course they do. Doesn't believe in forward guidance. This kind of surprised me a little bit, and says that inflation data being used is imperfect. So he's not necessarily looking at where inflation has been reported from and is actually looking at some other things. So he claims tariffs are not the main driver. So very interesting here, because that also gets into alignment with the Trump administration. So he's kind of playing both sides right here. I think he's going to do a rate cut this year. Will it be a massive, just 1/4 point I think would be all it takes to start that pendulum to swing on a more positive sentiment and get us moving in the right direction. Now, remember that Kevin Warsh had to go in front of Elizabeth Warren. Remember, they stopped the Clarity Act to get this guy approved. And she was asked about her grilling of him. Take a look.
To be independent and not influenced by the president. I think it was a bit of a trap to ask him about the election, to get him to disagree with President Trump. No Fed chair is going to weigh in on politics like that and the election results.
So look, I asked him a fact, but here's the deal. I asked Kevin Warsh when he was in my office a week ago, how would I know you're independent? Tell me about you. Tell me how you're going to be independent. You know what he told me? He said, I'm a tough guy. I am the guy who can stand up to Donald Trump. Okay, you can look him in the eye and say something Donald Trump doesn't want to hear. So I tested that. Who won the 2020 election? Nope, couldn't say anything.
Jay Powell wouldn't do that. Janet Yellen wouldn't do that.
If we have a Fed chair who is listening to a president of the United States who said, oh, tariffs don't cost anything. Oh, blockade in the Strait of Hormuz does not raise prices. Oh, prices are not going up. We have a president who thinks he can bend reality. We need a Fed chair who can actually assert reality. That was the test I was looking for. Kevin Warsh can't do it.
All right, so didn't answer the question, and you know, this is a test that, again, draws in the Fed into a political positioning. And this is something that I think anybody would understand. Of course, they're not going to answer. It wouldn't matter if it was Jerome Powell up there. It wouldn't matter if it's, you know, 10 other potential Fed chairs. I think it boils down to one thing. If he starts cutting, we'll know. And that will be the element. Granted, if nothing changes on the macro side. So we'll know pretty quick. Now, Mohamed El Erian talks about this in a little bit different way, but also in the line of where the Fed chair could go. Take a look.
Do you think it would be more prudent to wait until the geopolitical conflict has a bit more line of sight?
Whoever is in the chair right now will have no choice but to wait, because you have a highly divided FOMC. You have biases. Some are very sensitive to employment, some are very sensitive to inflation, and they are data dependent. So whoever is at the FOMC right now, I can guarantee you they're going to wait, and they're going to wait. The question is going to come later, probably in September, as to what you do then.
All right, so kind of like what I've been talking about is that it's likely that he doesn't come in with a cut. Now, granted, if something dramatic happens with Iran and we're out of there and things like that lay up and we possibly see energy prices dramatically fall, that could change the scale. But for the most part, I agree with Mohamed in the sense that it's going to be really a big test toward the end of the year. Let's jump over to Tom Lee. I want to get into something here because he's calling for something he normally does not call for.
10 of 13 Fed chairs had a drawdown of more than 10% in the first year. So I think it's more the rule than the exception that we'll get a big drawdown. Now, what does it mean for markets? Well, we've had a V-shaped recovery from the war lows, but that's more or less the rule, not the exception, because 9 of 13 bottoms have been V-shaped. So that takes us to our roadmap for the year. We originally said that the market could get towards 7,300, and it looks like we're on a path towards that. We're well over 7,000. And then we'll have a decline that will feel like a bear market. Perhaps it's because of the market testing new Fed chair. But keep in mind, a lot of the markets already had a drawdown in the Mag 7, crypto, and software. And then I think a rally follows because fundamentals are strengthening, maybe one of the strongest rallies we'll see in our lifetime.
All right, so there you have it. It looks like summer is the breakdown there on Tom's chart. And you kind of compare some of the key assets that are moving right now. ETH is up, Bitcoin is up. Here's Etherealize's CEO. Take a look what he had to say.
ETH is like Bitcoin, but again, Bitcoin plus, and it's productive, it has yield, which financial people love, but it also is a store of value and it's used as collateral. It basically uses the money across the economy. It is an asymmetric bet to say that Ethereum will reprice from being just valued on as a technology company, like Mike said, and transition to becoming a money. And when that happens, there is a potential 100x in it as that starts to happen. And so people, it's one of the best risk reward things to look at, I think, as we think blockchains become universal. And the timing, again, it might not be immediate to get to that 100x. That would be a little bit wishful, but the timings, the repricing could start pretty soon because people now know what Bitcoin is. People obviously know what gold is. There is a need for a digital asset store of value or multiple of them. And ETH is emerging more and more as that second pristine store of value asset, and we think it'll become the primary one. BlackRock just launched their staked ETH ETF, and so they're calling ETH a productive asset that's earning yield in the staked ETH ETF. Harvard just rotated some of their Bitcoin holdings into ETH. So you're seeing the institutional allocations diversify. So it's starting now, and this is the thesis for it to really catch hold.
All right, so just remember, guys, that these lofty predictions that come out on a lot of these things here, what you're trying to do is really just buy these dips. If you get a dip coming in and you believe in that asset, whether it's ETH, Bitcoin, whatever it is, XRP, doesn't matter. If you're convicted in the sense that you believe that project or that particular asset has an opportunity long term, then you could make these kinds of plays. Now, granted, there are some things that he is saying there that I think is interesting. And what I mean by that is the fact that we are in a very unique time where a lot of things are concurrently happening. AI is concurrently happening. You look at life studies on aging. You've got Bitcoin and blockchain starting to accelerate. And I think you also are going to see possibly even the re-rise of DeFi into this. So maybe in all of that, you've got, an everything bubble potentially going up. And that might get to these, lofty numbers that even Tom Lee is talking about for Ethereum. But with all that being said, you still have trouble in the water. And this is a good example of it. Here's Tron founders. Justin Sun files a lawsuit against the Trump family and the crypto project World Liberty Financial, saying they wrongfully froze his token, stripped me of my right to vote, and they've threatened to permanently destroy and burn the tokens. So you've got, of course, Eric Trump coming back in and looking at when they were friends. Only thing more ridiculous than a lawsuit on this is $6 million. Instead of really addressing the issue, which is what he should have done, but going at it, typical. One other thing to consider is when this lawsuit goes in, and the likelihood is it could happen, you're going to see discovery happen. And that, of course, will launch a barrage of what could be World Liberty files, in the sense of having so much information, emails, documents, all that kind of stuff being revealed in public and now being scrutinized in a court of law. This is going to go like crazy. And remember, this is all crypto. So you have to have that sentiment frame around much of what's happening in crypto. Let's hope that institution will continue to push in this direction, which is the positive side, because there's bad stuff that's always happened. Doesn't matter if you're TradFi or in DeFi or even in, the new version of finance that is brewing. Speaking of that, you have SoFi adding XRP deposits alongside Bitcoin and an ETH, including Solana, and becoming the first nationally chartered bank to offer XRP trading directly from FDIC insured accounts. So big news there, because this will most likely just proliferate through the entire banking ecosystem. But the new banks, I think, will be the ones to kind of focus in on it. Here is the story, though, and that, of course, is the New York Attorney General hitting both Coinbase and Gemini, alleging they failed to obtain New York gambling licenses. This is in reference to prediction markets. The state versus federal script. Remember, CFTC has been saying they're going to fight this, but at the same time, you've got Paul Graywall saying, hey, prediction markets are federally regulated. Remember, they were trying to partner with Kalshi on this. National exchanges registered with the CFTC. This issue is proceeding in New York court as we speak. Coinbase will continue to fight for federal oversight for this. So this is happening right now, both on Gemini and on Coinbase. One note when you look at this is that timing here is very unique in the sense it's happened on the same day that they launched perps. And I think when you look at what's going on with the regulatory front, Coinbase being, hey, I'm throwing up my hands, we're not winning this battle, we're not getting anything done. And I think they're just going to go back to kind of the no more Mr. Nice Guy, look at the pre-Clarity era, and I think they're going to jump right into Polymarket and, screw Kalshi is what it's going to boil down to. And if you think about it, they tried, I think in their position, they're maybe thinking it this way, is, hey, they tried doing everything the right way. We chose Kalshi. They're regulated, but yet we're still getting sued by New York on this. I think they're going to jump right back into and say, don't even go down this route anymore. Head over to Polymarket, start to go into basically an ulterior model here in terms of these kinds of markets. And it changes, I think, the whole trajectory of where Coinbase could be going soon. So when you look at what Coinbase is doing with AZUL, which is essentially an all-in play on decentralization, this all happens on May 13th. This will make Base more secure. And of course, with recent situations, this increases security and decentralization, including multi-proof driven stage 2 decentralization. This is the kind of advancements that I think are good for the industry, and we'll see if they're successful for it. But it also pushes them away from kind of the traditional model that has been the case right now. Last point I want to make is Devin Nunes, CEO at Truth Social, is out. Now, could this set up maybe a possible situation where we could get the framework of a social media platform that could be integrated into crypto in some way? Maybe any player out there who's trying to build, this might be an opportunity. Granted, I get that it's Truth Social, but maybe the engine, the tech, maybe there's enough there to where we could start to see a true decentralized social media rise to the top. We'll see. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.